Welcome, welcome, welcome. Thank you for joining. I'm just looking at the currency strength meter and the payouts. Euro USD 68%. I've just taken 4 1-minute spikes. I don't suggest, and I won them all. I don't suggest that you do that. They were further back here, not like this. They were hitting a top level range. But as D.L. Wood said, it's a bit like the kids playing in the middle of the street. And you know, if you don't get the exact entry, you can get caught with a very bad entry where you have to be very quick. So, and obviously it's very unstable. Right, Euro JPY won't do that. That's 60%. AUD USD again is 85%. I've got the Australian dollar a little bit weaker than the US dollar. And that's about it. So I've got USD JPY at 81, USD CAD 77%, NZD USD at 82%, Euro USD at 68, and AUD USD at 85. So we'll start with that one. We have got Euro news at 9:30 my time, Paris time in the morning over here. So it doesn't affect us at the moment, but I've just put a little asterisk against Euro USD because sometimes currencies can go, you know, depending on what the bankers want to do with the news, they hide behind the news, they can make it go stronger because they want to crash it when the news happens or whatever they want to do. So let's come over to our hourglass. At the moment it's on Euro USD. We're just coming up to the open of the market. So I get our 2 o'clock candle, which might be better to look at Euro USD JPY then at 81%, I think. We'll look at one with a Japanese candle. But do remember, I've now done 11 trades. I've won 11 trades in a row. I don't want to necessarily myself take a lot of trades. So please manage your own money, your own risk management, light risk or demo. Manage your own money. Got it on 3-minute non-fixed time. Watching the clock over here. We're going to have a look on our trading view. USD JPY on the 5-minute. And we can see, if I just come up to the half hour so we can see a bit more on the screen, we had quite a lot of, it is in a downward trend, has been for quite a while. If you drew a trend line, you will see that. Well, that has leveled off a bit now, because you can tell it's leveled off, because that now is forming, it's pushing up a bit. It's not that, you know, if I drew a trend line from there down, it's broken that now and it's come up to here, but it is still below. I'm on the 30-minute though. So we've got a key point of resistance there, but it's now operating down at this level. It does say hidden bull, and it is volatile, but it is a downward trend still. And it does have to break through that strong line of resistance and the quarter point. And we've got an upper level at that 108 there. You can see that is leveling off a bit. We have not got a hidden bull, we've got hidden bear. So that's good. That means directional trend still down. 982. I'd like to see it up at the 108 again. Not sure it's going to make it up that high, but it would be great if it did push up to there. And on the 1 minute, it has in fact broken the exponential moving average on the 1 minute. So that's our current moment in time, and that is at 107.978. 107.978. So it's operating between that and the oh, look at that shoot up, and that's just coming up to before the candle. So on HourGlass, we've got the US dollar at 54 compared to Japanese yen at 31. But we've got our moving average above, so it's a bit of a mixed message. It says it was called a put at that 107.978. I don't really want to take anything at the moment, this side of the hour. So we have got it overbought. We have got it overbought there. If we did take a put, we haven't got the currency strength meter in our favor. That Bollinger Band upper edge and that line of resistance there is at 997, so very near to our whole number of 108, which is there. If you look right, it's just a little bit above. So 981, we've got 30 seconds to go before the next candle. There is our 990 up there. And that's on the 1 minute, 16 seconds to go. It's up at 985. But the thing that concerns me is that, though it is still okay on the 5 minute, it does say hidden bear. Be nice if it pushed up to the 108 again. And there's our open. Let's see what we get. The DXY also says a put, so that is in our favor. It's a put at 983, although the US dollar is saying it's stronger. And, oh, right, I'm just got in that, see how I get on at 988 at 30 seconds past the hour. And let me just see what's happening on HourGlass. We had it off the Bollinger Bands 1, put in the arrow 2, 3, off the line of resistance at 986. So that's 4, cross down 5, cross down 6. We haven't got the currency strength meter in our favor. That is all. But deep, deep drop, sniper entry, well into profit. So expiry time at 3:14. So I've got 2 minutes left to go. So let's see how we get on with this. But a deep, deep drop on that open of Tokyo, big Japanese candle. That's why I went for this one, not Euro USD. But you can see that level up there. And if you look up here at where I got in, it was literally 30 seconds, and you could see it just dropping. So not always an easy one to catch. You do have to be very quick. You can't always catch it like that, because we've seen it time and time again where we say the bus has left the station. You know, that can happen, or it can move 30 seconds before the hour. Deep into profit on this one, on that open of Tokyo. Welcome, welcome, welcome. Thanks for joining, everyone. Nice to have the Americans on board. Great to see you. So we just let this one finish. I've got 2 minutes. 2:08 is on the clock up there. My expiry time is 3:14. Got 1 minute left. There's the purchase deadline. It has to be below that red dot when the vertical line, when price hits the vertical line. It's a downward red arrow because I'm in a put. We call them a put. It's for a sell. So looking down here, you've got the broker's specific ID number for this trade they've placed for me. The assets, which can be currencies, crypto, or commodities. And we trade all of those using this system. Usdjpy, strike price, which means the price that I got the entry at, 107,988. Expiry price means current price. So look over here on the broker, 933, and you'll see that change there, 933. So it has to be below that red line for the to clear. We call it cleared when we say we've won. It's called cleared in the system, and it was a put for a sell. Start time there, expiry time. We always have non-fixed time and 3 minutes. So we've won that trade. So we've won that at 81% payout. So on $20, that's $16.20, and that was just less than 3 minutes work. But it was a sniper entry. If you look at my vertical line on the open of Tokyo, where it says 34 seconds past the open, and we can see it on that chart there, that very big Japanese candle down. Hidden bear means directional trend is, the ongoing directional trend is down, which you can see there. If I drew a trend line, this is on the 5 minute, because we're taking 3 minute non-fixed time on a 5 minute chart. So if you drew a trend line, it'd be something like that. So it pushed up for the hour, but it wanted to carry on down. It wanted to carry on down. So that was a good one. And that green little bar at the top is my sessions timer. This is Sydney, that dark session. Blue was New York. So that's USDJPY. So what I thought I would do now, so I've explained how the system works. We've identified 5 pairs. These are the payouts, and you don't want to be trading anything less than 70% because of, you know, the return. So for example, if it was down at 60% and you lost the trade, so you've $10 lost at 60%, and you carry on at 60%. The next $10 one, if you win it, you've made back $6, so you're still $4 down. So then you've got to do one more trade to make another $6 to get back into profit. So it makes it quite hard work to get back where you were. So we do stay away from, you know, if there's nothing on your session and it's all low payouts in the low 60s, then walk away and come back a bit later and see if the payouts have increased. It's not worth your time and effort and your money to take these trades down at the 60% or so. So the ones I've identified for tonight, first of all, the usual system is when we were all on Forex. We look at our Forex factory. We've got some Euro news coming up in about 7 hours. So it's okay on the market at the moment, but be aware of that. And then FinViz, there is currency heat wave you might prefer, and there's live charts, I think it's called. So I do need to add those apps in onto my phone because this is a one-day relative performance, and I think the others are a little bit better, a little bit more sensitive. I use this because DL uses it. Now I can see what's happened already. Now we've had open of Tokyo, my JPY has shot up to be the strongest currency, which is on the left, followed by the US dollar, which has just overtaken the Canadian dollar. Parity in the middle, I've still got GBP and the euro. And then these other ones, Australian dollar, Swiss franc, New Zealand dollar, still at the end. So on the payouts I've been looking at, 81% on Usdjpy. USD CAD is paying out at 77%. NZD-USD is at 82. Euro USD at 68. And AUD-USD at 85. Now, the three main currencies that Matty Pips has made all his money from, a lot, bag loads, shed loads, more money than would fill this house, is on 90% of it on USDJPY, he said, 90% of his money on that. So I like to look at that a lot. Why do something different when it's done what it's done for him? Secondly, Euro USD. And thirdly, Euro JPY. So I stick to those where I can. We also like AUD-USD. Les is an extremely good trader. He likes AUD-USD, so I tend to follow what Les does as well. And then I quite like sometimes NZD-USD and possibly USD CAD or Euro CAD, but not very often, because what you want to do is just feel comfortable with the pairs you're trading. Les now only trades 4 pairs, which are the Matty's 3 pairs plus AUD-USD. That's all you need. I tend to have a list of others on because I flick through, but to be honest, I just don't feel comfortable taking a lot of them. And certainly the Americans, Matty Pips, he never ever trades any GBP-USD pairs, GBP pairs. He never trades them, but I know Les likes GBP-JPY. I haven't put it on my list for tonight because it's down at 65%. So when we're looking at a setup, as just before we started, what I did was go onto the 5-minute chart because we're in a 3-minute non-fixed time on a 5. Each of these is a 5-minute candle. You want ordinary candles on, not Heikin-Ashi or anything like that. And we just did a little bit of marking up where I said the upper range is our quarter theory, which is an extremely important line of support and resistance. Again, we use that in Forex a lot. Plus behind it, I can see a highlighted green dotted line of resistance that our indicators on auto support have drawn up for us. And the candle close channel has also drawn along there. So a heavy line of resistance with our 200 exponential moving average sitting above, forcing it down because that's measuring on a rolling basis 200 previous candles. It also says on our divergence down here, hidden bear. Now, don't get, I used to think, oh God, I'll never understand divergence. Les was so good at explaining it. All that it means is that bear means that you can see price has gone up, like that would be bull or upward trending. And it's said bear because what it means is in the short term, it's going to do a pullback. If it says hidden bear, it's telling you that the overall direction actually is downwards or bearish. If it said hidden bull, and the further back it is, then the weaker it is. So I know that said hidden bear, so that said it still wanted to go down and it was a strong signal. If it said hidden bull, then that would imply that it would start to break through above, and its onward directional trend would want to be generally upwards. So that would have made me very cautious to have taken that trade. And then the other thing is, if we look here at the DMI stochastic, it's a bit small on this screen. That's the other one we put on. And I've changed the symbols to C and P for call and put. And you can see exactly at Tokyo opened, it gave me a P for a put, saying, so we do like to have the DMI stochastic on and the divergence to help us make our decisions. Now, if I just come up to the 15-minute chart, just to show you a bit further back, as in Forex, support and resistance are drivers. So support there on that line, more support on that line. It broke through, broke above, broke back down. Again, acted as support, but here it's acting as resistance. And why isn't it support again? Because look at your candle close coming down to that line. acting as the most brilliant ceiling. Got 3 points of resistance there. And you've got the moving average above as well. So if I just show you that on a magnification, just trying to show you that line behind, that green line behind the orange quarter theory. So all those 3 lines are acting as here. It's rejected off it with flat top candles. So that buy candle finished there. It couldn't break above. The candle closed, then started to come down, and the open of the new green sell candle was exactly where the blue one had finished, where the buy candle had finished. So although it wasn't an engulfing candle, it was a very strong move down, 2 indecision candles. It tried to do a little push up before the hour, couldn't quite make it again. We thought it would make it again. And then a wick off at the open of Tokyo. So, you know, it was a very, very nice trade, that one. I'll just put that down on the 5 minute. So what I thought I would do now is what I did earlier. And I know I went on a bit on the afternoon session, and I don't know who caught this. There it is off the Bollinger Bands. It's still saying a put though. It was just to flick through all the pairs and explain it. So I'm going to do that again, even though some of them aren't on our payout list, just to show you. You'll get quicker at this, because this is the simplest thing I've ever come across. It's made so many people on the Go Live educators so much money. It's the most popular product, the most popular product in the academy. Brandon Boyd, who's our upline, our ultimate upline for us, he's a Chairman 100. This is all he does, is HFX. If it's good enough for him, it's good enough for us. So although I may be talking fast, going a little bit fast, and it's like, I know it's overwhelming when we change strategies, because I've done it myself, changing to this last September, and I thought, oh, I don't think I've got to go through all those videos and learn all this stuff again, and so overwhelming, so much stuff. That was just me feeling that, because I found it quite hard work the first time around. It really isn't that. Once you've got your eye in on Bollinger Bands and trading like this, depending on what system you've used before, it is a simple 7-point system that you just rinse and repeat. It's the same thing over and over, and quite frankly, making the money, I don't get bored with making the money. I don't want to tweak it. I don't want to add other stuff on. I don't want to look at other strategies, etc., etc. I just want to do this. And I find it, you know, very enjoyable every day, particularly helping other people and introducing them to it and showing them you know, the power of it. So what I'm going to do is show you how to analyze a trade. So first of all, DXY stands for the dollar index, and you can't trade it. It's simply been put on here because it's measuring the dollar against the basket of about 6 currencies, and I forget what they all are. It's the Japanese yen, the Swedish krona, the euro, and there's a couple of others. So it's giving you the relative strength of the dollar. So if you're taking, for example, Usdjpy for a put, you would also want to see the DXY saying put on that 5-minute signal. If the DXY is saying call, i.e. it's getting stronger, and you're thinking of taking a Usdjpy comes up as a put, you've got them at variance with each other, because the Dixie basket is saying dollar's stronger, but the Usdjpy could be saying a put because the Japanese yen is getting stronger relative to the euro. So that's driving the US dollar down because the Japanese yen has risen so fast, if you see what I mean. So that's why you can sometimes get a variance on it. So you need to check your DXY if you're taking any USD pairs. So let's quickly go through so I can show you how we analyze, and then we'll get back to some trading. And it's the same as this all the time. The 7 points are taken off. Is the currency strength meter on the right in your favor? So for a call, the answer here would be no, there isn't a point there. 7 points. We would want the US dollar stronger than the Japanese yen. Number 2, is it coming off the Bollinger Bands? And the answer is yes. So that's point number 2. Number 3, is it a green call? Yes, it is. So that's 3 points. Number 4 is it coming off a line of resistance. And I'll speed up as we go through. I just wanted to explain the point system. So it's off the Bollinger Band, but I can't see offhand it marking up along that line. Yes, I can there. So it's got one right back there. 9:30, it's called at 9:12. I've got one 9:03, but it's right back there, and that one is 9:35. So my price is showing in this right-hand column when I move my cursor. That one is 9:29. So it's got this lowest line of resistance forced down by that wick just after market open at 8:70. So a little bit of a peculiar one because I can't really give it a line of resistance at the price it's called it at 9:30. Oh, sorry, it's this line of support here because it's called it at 9:12. But there isn't one at 9:12, sorry. So I've only got the Bollinger Band really, and I think it's caused by the wick on that one. I haven't quite seen that before. So there's our market open, right down, it forced price right down to the green dotted line. And what you want really is a better move like that, where it crosses the line and then crosses back above, because these are what you call momentum indicators. And it's a bit like going up or down a ski slope would be a better example, or a car racing up a hill. It has to get up, has to get its momentum. So if it's pointing up and it crosses above the green line, then you know it's got the momentum in the move. And the same here. So this is a bit of a shorter move, have got a flick up, there. So we would have 1 point for the Bollinger Band, 2 for the call, 3 for the candle, 4 for the B for the buy, 5 for the flick up there, and 6 there, and it's up at 9:29, called at 9:12. So the only thing not in its favor, which can put you off trading, because we like to trade with the trend, is that your 200 estimated moving average, which is measuring over a longer period of time than this 5-minute, remember it's measuring 200 candles, where exponential means it's weighted towards price at this end rather than averaging price out equally, because obviously we're more interested in where we are in the current moment. So you can see that is still pushing down, and we saw that on our trading view where it said bearish. But what this is a pullback, so we would expect that to be coming up to say 958 or a previous line of resistance, because the red lines are resistance and the green lines are support. And on any strategy you trade, support and resistance, these Bollinger Bands are support and resistance. The lines in the middle are support and resistance. They're rolling lines of support and resistance. So you always expect support, these green lines, to turn, as you can see, to resistance, to turn back into support, and then support again, and then it turned into resistance up here, and there's resistance up there. So when we're looking at where we think the pullback can go to, I would write down 956 for the midline, or it may go back up to 107. And we only measure the last 4 numbers on binary trading. We don't need the big numbers at the beginning because we're just in a 1-second tick chart on the broker, okay? So I've written those down. And also, if you look at that line here, support and support in green, take my, well, I could take a line and show you like this, but remember, every time the 5-minute signal turns around, these lines don't stay on the chart. And I will have party pink. So there is a line at 945. I've covered it up now, but it's on the green line of support, because I'm hoping price would push up enough, give me a nice little push there down, using the previous line of support as now resistance. So it hasn't quite made it up there. It has taken that line back there, so it's a much smaller move at 930. So I'll just write down 945 and 930 because I want to see what it looks like, what our analysis looks like on TradingView. Now we've got 3 minutes 48 left on this candle, then we're coming up to the half hour. Market timing, half hour and hour. It's always a good time to take trades because price will usually reverse on those in particular. And the other way you can look at it as well, USDJPY for a call previously, if you had 2 puts in a row, then you know most definitely it's in a strong downward trend. But we've got the US dollar going up there and down on the pair. So that's a little bit of variance there. So you'd probably say, oh, I don't think I want to trade this because, you know, things just aren't adding up quite right. So if we come and look at it on the chart, on the 5 minute, we can see we have still got our hidden bear. We've had a very small move here. That's 9.14, 9.30. So it's really struggling off this line of support there. Can't make it above at the moment. 9.30 is there. And there is our 951. So that's our midline. That little brown line is the midline of the channel. So normally price would come to that and then come back down. Or as we know, over a period of time, price will always move from one edge of the Bollinger Bands to the other. I haven't got the Bollinger Bands on here. But we've had that big long candle, so price will want to come back up and balance that out at some point. No, it won't, because it's balancing this out. So you see it's all along here, but now Tokyo's opened again. It's probed down to there. It wants to clear out money, stop losses left in here, and pending orders which were activated. And then as price took off, what it's doing now is people are still in that trade because they're still thinking, the day traders, the intraday day traders, the swing traders are thinking, oh, look, you know, there's a pullback to the quarter theory. It's still going up, pullback again, it's still going up. So they're still in these trades and they've left their stop losses here. So now that market's open, the bankers and hedge fund managers who drive these big orders, they want to take that out because that gives them liquidity, it's called. It gives them money. It's picking up people's stop losses here because they're stuck in these trades thinking that price is still going to carry on up. So now we've analysed that, we'll come back to HourGlass, and it's given us another, we're at the 25 minutes past. Now, a very strict rule, don't get into trades just before the half hour, particularly like 28, 29 minutes past, because if you look at that PDF in Guide 3 in the team training that Les has put in there, it's only a 2-minute read. It's all visuals. Literally, just look at that. You will understand Evan Cabral's market timing theory on the hour, how price changes at the 15, 30, 45 and the hour. You will see the importance of not getting into a trade at 29 minutes past because price can reverse the other way on you, whatever the setup has told you, and on the hour. So we're just going to wait here because I want to see what it does, because we didn't get a pullback as much as I would have liked. I'm not going to take a trade, and I don't suggest you take a trade at this stage. It's actually given us a call, even though the currency strength is not in our favour. It's a call at 913, so it's having another go at going back up. Now, because this is coming up to the half hour, that was our hourly candle down to the half hour, what I would suggest now is that we would wait until the next, I'll probably be off this session by then. So in my thinking, what I would think is I'll probably come back to JPY to look at it for the 45-minute candle and preferably the hour, and then see if it's ready for another nice put. Maybe not as big as that, but I wouldn't particularly want to be taking calls unless you're happy to take a slightly riskier trade because there'll be pullbacks. But in any event, you want this line up in the overbought area like it reached there, and then cross down and cross down on these momentum indicators to tell you that you've got the move there. And it's still pushing down. So it's pushing down now to make the half hour. That's what it's doing now before it turns. So I'll just come back to the 5-minute there. So that's going down to 876. It's going to pick up that line, and we'll see if it's that's that line there. And if it, I beg your pardon, it's that line there, which was resistance, then it broke through. So it's that line at 875. For the half hour, it's where it was before, unless it decides that it wants to push down to the 835 or even the 817, because these are strong candles. So 817 is your lowest, or 822 is your lowest area. And so this is a market timing theory. And we'll look on, it's down at 889. What did we say? We said 812 could get down to 838. 818. It's down at 901. You want to be looking at your broker price, not your trading view price. You want to be looking at HourGlass and the broker. So the broker is at 895. Sorry, the broker's at 903, and HourGlass is at 895. So we've got a difference of 8 points. That was our lowest. It's come down to 887. 887. So it's on that line there. And we are at 28 minutes past. Let's have a look on HourGlass. So the US dollar getting stronger, the currency strength meter stays weaker. We've still got the hidden, oh, it's got a bull there, which means pullback, but the overall directional trend is still saying hidden bear, still down overall. And we'd want to wait 1 minute 22 till we see how it bottoms out on the half hour. 869 we've got there, but you can see it's flatlining here, still pushing down. And those Bollinger Bands are, it's just pushing down for that half hour. So because I've taken and won more trades than I normally would in a day, 11 in a row, I did 4 1-minute spikes just before the session started on Euro USD, which I don't advocate that you do. So I don't need to take a lot of trades. I don't particularly want to. I'm happy to do analysis. If you're practicing, do this on demo. You could take this for a call, depending on what happens in 30 seconds. You would be looking at a call if the DXY stays as a call. So if you want to practice, do it on demo. I'm not going to take the trade. I probably not because it's not a good setup. I just have done more than enough today, and you don't want to overtrade. That's how you make mistakes and start to go wrong, and you don't need to be doing that. You just want to be compounding at your 2.3, 2.4% a day. That will get you everywhere you need to get in life. And Matty Pips, over the time he built the money over 2 years, 21 months, 2 years, he averaged 2.33% a day or 8% a session. So it's the power of compounding. Right, so we've had a call at 878, haven't got the currency strength in our favor, lines are still pointing down. That's the thing with Usdjpy, it can give you lovely candles, but it can have some momentum in them and take some time before they turn round. So it's 878, 884 on the broker. There's your 873, 878 sort of area at the 30 minutes past. So sniper entry would have been there. If you get a pullback, you could take a call. Be nice if it went down to 878 again. Or it seems to have just taken off now. That can sometimes happen. It does happen to us where you know, it goes and then you don't. if you're not precise on your entry and don't understand what's going on, you don't want to start to get in once any pair has moved up. You just wait for another trade, because it's what we call the bus has left the station. It just causes you stress. You want the best entry possible where you've worked out we're time-based traders. That's the half hour. It's now 1.5 minutes into this new 5-minute candle. You can see it's forming the higher lows. So it's on its way up, and there it is going up to that 945 we said is up. That's 920, that peak up there. 930, that we had 930. So I can't remember where the halfway line is. The halfway line is at that 930, 904. So should work its way back up to this 920 area. So that was a good trade, that one. As I say, I just don't want to overcook my books today. That was a good trade. So what I'm going to do now is flick through the rest of the pairs for you, just to show you. Now I've explained the system. If you've got any questions, please put them in the chat. We're very happy to answer them. So you've got the cross up, that's 1, 2, 3 for the call, 4 for the arrow, 5 off the Bollinger Band, 6 off this line of resistance, support. And you can take trades where you haven't got the currency strength meter in your favor. 3 is a good trade. Remember, we haven't got the B here. You want it underneath the B or the S. B for a buy. That is a point if you have that actually there. But just add them up, and it's the same thing every time. So that's USDJPY. Personally, I'll be waiting for it to come back up to this area and then think about taking it for a put. And I would wait now till the next hourly candle, if you know, that's what I was doing, and I was in my session when I was doing my trading. So that's how I kind of make a note to come back to it. So, and I'd keep an eye on the DXY. So next we'll just have a look, flick through the pairs. Euro USD 43 to 21, so that's saying the euro is stronger, but it's saying it's a put, so it's on a pullback, because stronger means its trend is going upwards. You can see it's been pushing upwards since open. You've got the moving average above, so that's forcing price down. So it's in a period of a bit of flux. It's got cross down, cross down. It was called at 178, it's now at 169. So you had put 1, arrow 2, Bollinger Band 3, line of resistance 4, didn't quite have the sell because it should be underneath, 5 for the cross down, 6 for the cross down. So you haven't got the 7th point on the currency strength meter, and also your moving average is above, so you can't count that. Sometimes we count that as a plus, as a number 8, but from what I've added up on the point system, very good trade for a put. Okay, so that's Euro USD. Ideally the trend is your friend, so I would wait for a pullback down to your next lines of resistance, which is either going to be, because they're always in little zones, they're not that precise, so it's 160 to 155, to that midline at 151. So I make a little note and think, well, when it's back at that level, so at the 45 candle or the hourly, you don't always have to wait, because sometimes they can turn. You know, it's just generally that's a rule that we like to stick to, or that you've got your heavily oversold area, and then you know it's down far enough and should be turning back up for the call that you want to take. So the trend is your friend. Euro 43 JPY, the yen 37, called as a put. We've got the same thing going on. We've got the EMA against the strength of the euro. It's floating around in the middle. We haven't got it off a strong line of support or resistance. It's not in the middle, it's not on the edge of the Bollinger Bands. So it's a much smaller move. So maybe it needs to pull down to 635. You can see it needs to work its way down a little bit there if we could, and then could take it for a call. Not a brilliant setup, because it's still saying the euro is stronger, but the moving average is pushing it down. It's had quite a bit of consolidation there, narrow Bollinger Bands, but they have expanded as Tokyo has opened. Euro CAD, Euro 46, it's weaker than the Canadian dollar at 64, it's weaker. Now that fits in with the moving average being above. It's also a downward trend. You can see clearly a downward trend right at the bottom of the Bollinger Bands. It's a call at the moment. It's doing, I don't trade this one at all, but it's doing a little pullback. So look back, always look left to see what's going to happen right. So see, you can see it's bumping along the bottom there. So you want a little pullback and to go down because it's not going to work its way back up anytime soon because of everything we've just discussed, that EMA and downward trend. And you can see it happening there as well, the euro strongly going down. So at this point, I sort of check back on FinViz, euro against Canadian dollar. You can see Canadian dollar's a lot stronger. So I wouldn't be trading that one anyway. USD chef 26 on the US dollar to chef is Swiss franc is 28. So that fits in with the DXY being a put. Called 2 minutes ago. Now, don't like this, wouldn't even look at it. The reason I wouldn't even look at it is the moving average is going right through the middle. We don't tend to like that because it means consolidation. You want your 200 EMA for the best probability of success to be above for a put or below the Bollinger Band for a call. So a lot of consolidation. It is moving down. It has called a put. If it does come back up, then the level you'd want to look at was you would hope to get 704, which is where your 200 EMA is, or 700, so in that zone there. So anything at 700 and above for a put once it comes back up. And the reason you only want to take puts is because it's right down here in the oversold. It's a downward directional trend. You've got moving average above slicing into it. It's not going to make big moves. You can see it's made smaller moves. It's not going to head right back up there. So that's how I'd look at that one. USD CAD 26 on the US dollar against Canadian dollar 64. So a great deal weaker, big drop down. Oversold off that line 915. It called a put just before it 933 and it's at 923. So it's a very nice area for a call. But again, we've got our moving average cutting through the middle and the US dollar is weaker. So I wouldn't disregard this trade, but it's slightly, you've got to judge it slightly riskier. You've got to be confident that because you've had some wicks there, you've got to be confident it should be good. It should turn 47 seconds. We'll wait and see. It should give us a call. And then you'd want this other momentum indicator just behind my plus and minus signs pointing down. You'd want that. Obviously, it's got to get the momentum up, but we are time-based traders. So once you've done your analysis and thought about your setups, now I'm flicking through quite a few, but as I say, you don't need to go through that many. You're looking for 2 or 3 good trades an hour. Like I said earlier, I'll come back to Usdjpy as it approaches the hour. I've made a note of that. I know why. I've done my analysis. I don't have to take any trades till the hour. I can go make a coffee, do one good trade on Usdjpy. Just trying to flick through these to repeat to you how to recognize the trade. So 7 seconds left to go. We haven't got the currency strength in our favor, but it is off the Bollinger Band and that line of resistance at 914. It is oversold. We have got a call. Let's quickly flick up. Dixie says put, which is not good. We would want them congruent. So it's a call at 924. It's currently at 922. Call 1, arrow 2, Bollinger Band 3, line of support 4, cross up 5, not quite crossed up, but that's what we want for a 6. So it is a good trade, except that yes, DXY is a put, which is a put again. So that puts me off, to be honest, and that must be because it's been forced down by that moving average. So you're not going to get a strong big momentum up. And let's have a look on our trading view just to see 5 minutes. So it's just sitting along that line here. And there is the 924 was there. And that trade actually is working out okay. And you can see, just trying to see if it has exactly picked up previous lines. It hasn't really. Yes, there's one there. It's used that as resistance, broken through, wicked below, so that's resistance, but then broken through, broken back down, broken back above. So been quite volatile in New York yesterday. And are there any more over here? Yes, it's used as support all the way back there. So do learn to go back a bit, because you'll see, look how often it has used this line, exactly that line, as support. And it does say hidden bull, although it's a little bit further back. You did have the call there on the DMI stochastic as well, and you've got the flick up on the divergence. So that was actually a good trade. It's not one I usually trade, but that did work out okay. So you don't always have to have your currency strength meter in your favor, but do make sure the DXY is congruent with what you're doing on the dollar pairs. NZD/USD, we've got the dollar is weaker. 627 2 minutes ago, called as a put, but we've got the dollar is weaker. So this is a pullback on NZD/USD. You can see it's moving up. However, we have got the 200 moving average above it. So it's in a bit of conflict there. And let me check on FinViz. So FinViz, I've got the NZD weaker than the US dollar. And then I would go, because I'm not sure about this one, I would then look at that and check what the currency strength's doing. And then I would look on my trading view on the 5 minute, always on the 5 minute. So on the 5 minute, what this says to me is it's trading in a range, isn't it? That looks like a pretty nice pattern across. It can't really break above this 652 area, 652, 652. And it's trading down, there's the line there at 589, and then we'll come back on HourGlass and see how that matches up. So that, to me, you just learn to get sort of confident about it, because I've got it as resistance there, then it broke through, became support, then it broke back down and it broke back above. So it was resistance, then turns into support, support again, support again, support again, broke a little bit of a break back down, breaks back above, uses it as support, breaks right back down, which is the weakness on the NZD. We said it was getting weaker, has used it as support, has come back up to its upper level and is now working its way back down. So its lowest level is that at the moment, the 528, but the midline zone is 582 to 589. And then back to HourGlass to see how that matches up. Horizontal line, 582, round about there. It's not always like precise. You can draw a little rectangle box. Clone, 582, you can draw a rectangle box instead of lines like this to 589. Something like that. Is that line there? We've just been, there you are. It's just blooming well disappeared, because it'll do that on the 5 minute signal. So it's given us a call at 607. So I had it between 589 and 602. So I'll just put the 589 one on, thereabouts, 589 there, but it's called it on this line, 606. So it's saying 607, 607. So it wants to take that as its line of support now. And you can see before it was resistance. There it was support. So that matches up nicely. It prices at 605. You have not got the flick up. You want the flick up and the flick up. And it is kind of in the middle, but the moving average is pushing it down. But the NZ dollar is stronger than the US dollar. And that's why we saw trading in that upper and lower level sort of a range. So it's just decided, where are we, 46, and should go in a minute. It's just decided it's pushing down a little bit further. and it's picking up that level there. It's just picked up that level of support instead, 602. That does say hidden bear, so it's in a bit of a period of change on that one. GBP USD. Again, I always check the DXY. It's a put, and it says that the GBP is weaker, so either that, so that must be strengthening, and the dollar is weakening. If the dollar's weakening, that would account for the NZD going up, I suppose. So 383, flick up, off the Bollinger Band and the line of resistance. The call and the green arrow, got a blue bar candle behind. Haven't got the currency strength in our favour. And we've got that moving average above. We've got quite a smaller trading range, like NZD, USD. You can see clearly it's trading for calls and puts between those bands. So, you know, look at the pattern. That is not a trending market up or down, which is not a problem, but just be aware of what you're trading. GBP, JPY, GBP is weaker than the Japanese yen. Yes, that fits in with the moving average. It's right down the bottom of the Bollinger Bands. We've got a candle changing. We've got, what's the payout on this one? GBP, JPY, it's only at 65%. It's right down at 296 on the broker. GJ, 5-minute chart. It's down here. So it's pushed down very heavily. So that looks like it's on a mission to go down to the quarter theory, the 250. Let me put it on the 15-minute, see if it's been down there before. We'll put it on the 30-minute, might just be a bit quicker. I should put it on the hourly maybe, not for ages. Put it on the hourly, just to see what's been happening with the move on the currency pair. So we can see that it still has to clear up all this money. Same thing we were talking about earlier. So it's on its way down to hit these quarter theories. Doesn't mean it'll do it all at the same time, but you can see it's broken that next one now. So 250 is this one here, and it will want to come back down and suck up all that money. And it does say hidden bear, directional trend down. So we have got the GBP going down. So I wouldn't be taking this because I'd be thinking it wants to push down, or there is a line of resistance at 291. That price loves to hit quarter theory, particularly if it comes up to an hourly candle. So you can see it's trying to push down. Well, that's wicking off it. So it was a call at 312. It's currently at 308. It is off the Bollinger Band, the call and the arrow and that line of resistance. You've got the flick up. You haven't quite got the flick up on the RSI. You haven't got the currency strength meter, but technically it should be a good trade for a call at the moment. The points do add up, but you do have to bear in mind, oh, and it has gone up, 327. So when did it move? It moved after the 47.48. That's our 50. This is our last candle before the hour, and it just shot up. So two 5-minute candles before the hour. So I think it's going to move up to that 381 or 438. So I'd be looking at that, and then for a put, probably at the hour if I was thinking about trading this because of that moving average. And what we've just discussed. So I'm not going to look at GBP Chef, wouldn't ever look at that. GBP CAD, wild and wacky, I never trade it on this. GA, very, very fast, I wouldn't ever trade that. Euro NZD, I wouldn't ever trade that. These are all 10 out of 10 pairs, personally speaking, and you can trade what you like. Euro Chef, very weird pair, I've never traded it in my life anyway. Euro Ward, fast pair. Chef JPY Cross, never traded it myself. Swiss franc. CASHTRAP I've never traded and I wouldn't want to. There's AUD/USD. We'll just finish on that. We've got the Australian dollar stronger than the US dollar. Call at 0.83. We would want to check, is the US dollar going weaker? Yes, it is. We are 1 minute into the last 2 sets of candles before the hour. Let's just go back and find it. There it is. It was called at 0.83. It's 0.85 on the broker. It's off this line here. So we've got the flick up and the sort of flick up there. 0.85. It's just dropped to 0.82. We have got the moving average above us though. It's not ideal. Australian dollar's just gone to the strongest. That's good. So let's put your broker on at this point so you can measure use your cursor. I always use my cursor, measure where it is at the moment. So it's just shot up to 102. So at the 50-minute, that was our block 49. So it just started to move. This is what sometimes happens at the 49-minute candle instead of the 50, the new 5-minute block. So sometimes you'll find that happens, and sometimes you can preempt it. It's just a little bit more advanced maybe. There's our 50-minute. That would have been the perfect entry at 0.77. And that is deep in profit. So that is a very nice move. But it just moved slightly. That's 0.83 it was called at. So if you're looking for a call, you want 0.83 or below. So 0.83 or below. This is a 1 second tick chart, remember. 0.83 is that line here. 0.83 or below. That was at 49.28. But if you'd seen it started to, the bus get away from the station, don't panic and think, oh, I'll get in here at set 0.88 really, because the further away you are from where you think it's bottomed out, the more stress it causes you. And there's always other trades. We've got 10 to 12 trades an hour on a 5-minute signal turnaround on about what I don't know how many pairs there are there, 28 pairs or something. So I'm sorry I haven't taken a trade. I don't know if you have. There's AUD/NZD I very rarely trade. AUD/JPY I don't really trade. And then a weird one, AUD/CHF, I wouldn't personally ever bother with that. So really I know Julie's fairly new. We've known each other a long time. She's new to binary options like I was last year. So I did hope that this analysis session has been helpful, even if I haven't taken a trade with you. So I'm going to stop sharing, see if there's anything in the chat. Nothing in the chat. So I don't know if anyone's got any questions. Otherwise, I'm going to stop the record.